Hello, everyone. Welcome to today's episode of the Daily Dose. Today is Thursday, October 6th. We saw a little bit of volatility today, but mostly down on the markets after a couple big up days earlier in the week. This article says that investors are mulling Fed speak and await the jobs report, but the reality is that we were up so hard earlier in the week that you kind of need a little bit of a cool off. That can even be a good thing for bulls in this market, not to see it just go super parabolic right now, because that would very clearly say that it's a bear market rally. No matter what happens, it's most likely going to be a bear market rally, but it wouldn't be anything sustainable if it was just going up 2% every day for 4 days straight. I mean, that's just not that's not anything sustainable. So this can be a good thing for bulls, especially at the level that the market is at right now, and we'll take a look at that in a second. Obviously, you don't want to fight the Fed. We're still in a tightening cycle, a pretty aggressive one, so you don't want to fight the Fed there. But as far as the price action goes, it's not looking horrible at this point in time. Obviously, there's a lot of risk with what's going on right now, but valuations are approaching fair value territory. They're still a little bit on the expensive side, but we'll take a look in a second. So the S&P 500 was down 1%. The Dow Jones was down a little over 1%. The NASDAQ was down 0.68. And I'll just go ahead and say, actually, if you like this type of content, please be sure to subscribe on YouTube and follow us wherever you listen to podcasts. I release an episode like this every day that the market is open, and a longer, more in-depth video over the weekend. So if you haven't watched last weekend's episode, be sure to do that. And I'm going to have a good one this week as well. I've already found a bunch of great charts to go over in that video and some good things to talk about. So if we take a look at the S&P 500 and the other indices year to date, you'll see we're still down between 17 and 30% on them, the lower being the Dow and the upper being the NASDAQ, and the S&P's in the middle. But let's take a look at the charts, actually. So if you look at the S&P 500, you'll see what I mean. So Monday, Tuesday were those two really, really big days. That was the most we'd seen the market go up in 2 days since March of 2020. We also have this little bit of like an island structure here. So this is kind of synonymous with a relative bottom in a market. So that all that means is that you gap down. So the futures were down heavy. We opened and closed down, and then we built up some structure. We got a little fake out, breakout to the downside, and then we gapped up. And that's just called an island right there, because we gapped into it and gapped out of it. And that can be a good sign if you're looking to the upside. As far as where we're at right now, obviously we're kind of building some structure now on top of this support zone. The next spot would definitely be around 3,900, kind of the 3,895 to the 3,985 level, so kind of like a 100-point range there in the S&P 500 that could be met with some selling. And then after that, we'd probably move towards this zone near the 4115, as well as that trend line would then be being met. And I don't see us breaking through that trend line until the Fed pivots, but who knows? That could be a good level if you want to short, and the Fed's still tightening. That could be a good level. What I'm really excited to talk about is Bitcoin, because I've had this trend line on the chart for so long, and I was so anxious to see if it would hold. We've been talking about it for a while, and what do you know? It held. So we touched the trend line today. We bounced off of it. The market is down since then. So it looks like the market is going to respect this trend line, and that's scary for Bitcoin because there's not a lot of space right here, and it's going to have to do something. So I would be surprised if it got squeezed right here and ended up just like breaking out of this trend line and then still staying in this zone. Like, that would really surprise me, because this trend line has been on the chart and respected for a year, almost a year, since November of 2021. So, I mean, this isn't a level that's just going to like be ignored if it's broken through. And I don't see Bitcoin making its huge bull run right now. I mean, maybe it does, but it's just at an interesting point. If we break through this trend line, we could maybe immediately get up to like 28,000 to 30,000. But even then, that would be not a huge move. I mean, that would be a really, really, really big move. But in terms of like how long and how far this trend line has been respected, like that wouldn't be that big of a move. If we break through this trend line, like I'm expecting like 40K, like a huge move. And I just don't know if that's going to happen. So I think there's a lot of like uncertainty on Bitcoin. There's a lot of things that could happen. What I kind of see happening, I'm almost hoping for this because I want to buy in cheap. So I guess there's a little bit of bias with my opinion here. But what I kind of see happening is like we get squeezed right here and then a break like down below and then a break and then we go to like the 9 to 12,000. That's what I see as like the most likely scenario right now on Bitcoin. Obviously this trend line is still really meaningful because it just completely bounced right off of it. But with how it's interesting because with how Bitcoin's been correlated to the market, and the market's kind of setting up to go bullish here, that would kind of like mean that this would break through the trend line, but that would be like the S&P 500 breaking through this trend line, and I just like don't see that right now because of how correlated it's been with the market and because we've been at this level in this range for so long that I would be surprised if the Bitcoin market had given us 4 months to buy the bottom. I mean, I bought in this level. I know a lot of people who have bought in this level. MicroStrategy's bought in this level. And there's definitely nothing wrong with that. It's still a really good price. I mean, Bitcoin's still down like 70%. From the high, so it's still a good price. But typically, you see 80+% in the Bitcoin or in a crypto winter, and that's where we would be if we went to the 9 to 12,000. We'd be at like that 84% down, which is the sweet spot for a bottom in a crypto winter. So that's why I'm saying I kind of see a more likely scenario where we move to the downside in Bitcoin and kind of just get squeezed out of this zone. But anything could happen, obviously, since it's been correlated with the market. If the market does make a bullish move, and here's another thing that could happen. So let's say that the market does make a big move. Let's say we break through this 3,900 zone and we get it back up to the trend line. So let's say Bitcoin also breaks through the trend line in that scenario, that we reach the trend line on the S&P 500. I would expect to get back up here. So let's say Bitcoin pops to 28K. Everyone thinks the bottom is in. There's a lot of FOMO in the markets at this point. The S&P 500 sitting somewhere around 4,100. Maybe it's sitting at like 4,110, and we're over here. The stock market's right here, and Bitcoin's up here at 28,000. At that point, the Fed continues to be hawkish and tightens. The inflation is not really coming down. I would expect the market to get shorted off this zone heavily. I would expect this channel line to eventually get touched still. So then that would open up the possibility of the S&P 500 going to like a 3,500 or a 3,250. And that would open the possibility of then a fake out on the Bitcoin market and it coming either back down to this 20K level or all the way down to the 12 to 9,000, which is what we were kind of suspecting. So I think you're going to have to be careful. I think there might be a huge fake out coming. Just by the way it looks on both the markets, how they're like pairing up together. But that's just my personal opinion. Obviously, do your own research before you make any investment decision. Don't listen to me. I'm here for entertainment. But that's kind of what I see happening. So it's definitely a time to be careful. Obviously, it's a really volatile situation, and the market won't truly change trend until we're out of this tightening cycle because we can't consistently get gains in this climate that we're in. So that's where I'll leave it today. This one went a little longer than expected and how I normally do these videos, but I appreciate you watching or listening to this episode. Be sure to subscribe on YouTube and follow us wherever you listen to podcasts. And until next time, Thank you for listening.